bookkeeping and accountancy, that examination is very near. I wish to give you some tips on this paper. First one is, there are three types of accounts: real, personal and nominal. Examples of real accounts are cash in hand, cash at bank, sundry debtors, bills receivable, closing stock, goodwill, plant machinery, building, computer, furniture, etc. Similarly, personal accounts. Personal accounts means accounts relating to persons. Examples are Rama's account, Krishna's account, Federal Bank account, Maruti Udyog Limited account, etc. Then nominal account. Nominal accounts represents to expenses, losses and income and gains, that is salary paid, rent paid, income tax paid, commission paid, advertisement charges, discount received, commission received. These are all coming under nominal accounts. Thus, three accounts: real, personal and nominal. To debit, in each and every transaction there are two aspects. One is giving and other one is giving. This may be either debit or credit. This is decided on the basis of rule of debit and credit. The rule of real account says debit what comes in and credit what goes out. The rule of personal account is debit the receiver, credit the giver. The rule of nominal account is debit all expenses and losses, credit all income or gain. There is another rule for debiting and crediting each and every account. That is, when you debit an asset, it increases. When you credit, it decreases. Similarly, when you credit a liability, it increases. When you debit, it decreases. Then, if you are debiting an expenses, this expenses is increasing. If you are crediting an expenses, that expenses is decreasing. Similarly, if you are crediting an income, that income is increasing, and debiting, income is decreasing. These rules are also applicable for determining the debit and the credit of each and every transaction. Then, what is a journal? Journal means a daily record of business transaction. This is known as book of original entry or prime entry. Ledger means group of account is known as ledger. So, first of all, we are entering all the transactions in the journal. From the journal, we are opening various accounts, and this debit and credit is transferred to respective accounts. This is known as ledger posting. Then after that, this ledger account is balanced. Nominal accounts are not balanced, only total. Real account and personal accounts are balanced, and this balance may be either our assets and liabilities. These balances may be taken into a separate sheet known as trial balance. So what is trial balance? Trial balance means the balances of ledger accounts on a particular day. It contains real account, personal account and nominal accounts. So when you prepare a trial balance and when you answer some questions, you must remember that all assets and expenses account will show only debit balance. All liability and income account will show only credit balance. From this we can decide which is asset, which is liability. So otherwise, if an account shows debit balance, you can definitely say either it is an asset or it is an expenditure. From this formula, AED and LIC, you can find out easily. Then, the journal is divided into 8 books. These are known as special journals or subdivisions of journals. That is cash book, purchases book, sales book, purchases returns book, sales returns book, bills receivable book, bills payable book, and general journal or journal proper. Here, cash book is very similar to an account. So, cash book is known as a journal as well as ledger. At the same time, in the purchases book and the purchases account is different. In the purchases book, this is a journal. In this journal, we are recording only credit purchases. But in the purchases account, we are recording both the cash and the credit. Similarly, in the sales book, we are recording only credit sales, but in sales account, we are posting both the credit and cash transactions. Similarly, purchases returns, sales returns book, bills receivable, bills payable. Those transactions which do not affect all these books, this is separately entered into general journal or journal proper. Thus, journal is divided into 8 records, or this is known as 8 subsidiary records or special journal.